Welcome to Wonderslate. Subscribe to our Telegram channel given in the description to updates and study materials. Topic for today's quiz is Bill of Exchange. Question number 1. Which of the following is a correct statement? Option A. Bill's receivable account is a real account. Option B. In order to renew a bill, the original bill need not be cancelled. Option C. At the time of endorsement of a bill, the Drawee debts bill's payable account. Option D. When noting charges are paid by the bank at the time of dishonor of the bill, the Drawee credits bank account. The correct answer is Option A. Bill's receivable account is a real account. Question number 2. Which of these statements is not true about a promissory note? Option A. No notice of dishonor of promissory note is required. Option B. Dishonor of promissory note does not require noting or protest. Option C. A promissory note cannot be made payable to the maker himself. Option D. Promissory note cannot be made payable to the bearer. The correct answer is Option B. Dishonor of promissory note does not require noting or protest. Question number 3. A bill dated 1st January 2000 and 141st January 2014 is a payable 6060 days after date. The maturity date of the bill will be underscore. Option A. 2nd of March 2014. Option B. 5th of March 2014. Option C. 4th of March 2014. Option D. 1st of March 2014. The correct answer is Option B. 5th of March 2014. The term maturity refers to the date on which a bill of exchange or a promissory note becomes due for payment. In arriving at the maturity date, 3 days, known as days of grace, must be added to the date on which the period of credit expires. Instrument is payable. A bill dated 1st of January 2014 is payable 60 days after date. It falls on 5th of March 2014, i.e. 63 days after 1st January if it were payable 60 days after date. Question number 4. From following which are the options available to drawer? Option A. Retaining the bill. Option B. Discounting the bill. Option C. Endorsing the bill. Option D. All of the above. The correct answer is Option D. All of the above. Once the bill is accepted by Drawee, it will be presented for payment on its due date. Hence the drawer can enjoy few perks on the bill. Question number 5. Mr. Lava draws a bill on Mr. Kusha on 1st of April 2018 for 30,000 rupees for 3 months payable after sight. The bill was accepted on 7th of April 2018. Calculate due date for the above bill. Option A. 7th of July 2018. Option B. 4th of July 2018. Option C. 1st of July 2018. Option D. 10th of July 2018. The correct answer is Option D. 10th of July 2018. In case of a bills payable after sight, the legal due date is calculated from the date of acceptance of the bill. In this case, the due date will be date of acceptance of the bill, 7th of April 2018. Period, 3 months. Maturity date, 7th of July 2018. Grace days, 3 days. Due date, 10th of July 2018. Question number 6. A bill which is not an inland bill is a underscore bill. Option A. Outward. Option B. Inward. Option C. Foreign. Option D. New. The correct answer is Option C. Foreign. The foreign bill of exchange is a payment drawn up in one country that is payable in another country. Question number 7. Drawer of a bill of exchange is generally or underscore. Option A. Creditor. Option B. Debitor. Option C. Both A and B. Option D. None of them. The correct answer is Option A. Creditor. According to the Negotiable Instruments Act, 1881, a bill of exchange is defined as an instrument in writing containing an unconditional order, signed by the maker, directing a certain person to pay a certain sum of money only to, or to the order of a certain person or to the bearer of the instrument. There are 3 parties to a bill of exchange. Drawer is the maker of the bill of exchange. A seller/creditor who is entitled to receive money from the debtor can draw a bill of exchange upon the buyer/debtor. The drawer, after writing the bill of exchange, has to sign it as a maker of the bill of exchange. Question number 8. The person in whose favor a bill is endorsed is known as underscore. Option A. Payee. Option B. Drawer. Option C. Endorsee. Option D. Endorser. The correct answer is Option C. Endorsee. The process of transferring the bill from one person to other is called endorsement of the bill. The person who transfers the bill is called endorser and the person to whom the bill is endorsed is called endorsee. Question number 9. The cancellation of the old bill maturity in return for a new bill, which includes interest, for an extended period is called underscore. Option A. Retiring of a bill. Option B. Renewal of a bill. Option C. Dishonor of a bill. Option D. Rebate on bill. The correct answer is Option B. Renewal of a bill. Sometimes, acceptor of a bill finds himself unable to meet his acceptance on the due date. So he may approach the drawer of the bill before the maturity date arrives, to cancel the old bill and draw a new bill with extended date. The acceptor in this case will of course have to pay interest for the extended period. Thus the cancellation of the old bill maturity in return for a new bill, which includes interest, for an extended period is called renewal of a bill of exchange. Question number 10. How many days grace period is given for payment of a bill of exchange? Option A. 3. Option B. 7. Option C. 4. Option D. 5. The correct answer is Option A. 3. According to the Negotiable Instruments Act, 1181, a bill of exchange is defined as an instrument in writing containing an unconditional order, signed by the maker, directing a certain person to pay a certain sum of money only to, or to the order of a certain person or to the bearer of the instrument. The term maturity refers to the date on which a bill of exchange or promissory note becomes due for payment. In arriving at maturity date, 3 days, known as days of grace, must be added to the date on which the period of credit expires. Question number 11. Inland bills are those bills which are underscore or underscore in India. Option A. Drawn, payable. Option B. Accepted, stamped. Option C. Stamped, registered. Option D. None of them. The correct answer is Option A. Drawn, payable. A bill of exchange which is drawn or made in a country and paid in the jurisdiction of the same country is called inland bill. The Section 11 of the Negotiable Instruments Act, 1881 provides that the bills of exchange, including checks/promissory notes, drawn or made in India and made payable in or drawn upon any person resident in India shall be deemed to be an inland bill of exchange, or inland checks or inland promissory notes as the case may be. Question number 12. Average due date can be called as underscore. Option A. mean due date. Option B, median due date. Option C, mode due date. Option D, zero date. The correct answer is option A, mean due date. Average due date is defined as the mean date on which one payment may be made in lieu of multiple payments due on various dates, keeping in mind that both the parties may not suffer with the loss of interest. Question number 13. Refusal or inability of the acceptor to pay the amount of bill is termed as underscore. Option A, refusal. Option B, dishonor. Option C, retirement. Option D, renewal. The correct answer is option B, dishonor. Dishonor of bill happens when the acceptor of the bill fails to make the payment on the date of maturity of the bill. Hackney, liability of the acceptor is restored. Entries made for recording dishonor of the bill of exchange are reverse of the entries of recording drawing of the bill. In the books of drawer, acceptor AC doctor to bills receivable AC. Bill dishonored. In the books of acceptor/Drawee, bills payable AC doctor to drawer AC. Bill dishonored. Question number 14. A draws a bill of exchange of Rs 8,000.8,000 on B for 44 months on 15th April 15th April. What is the due date if on the due date a public holiday is suddenly declared? Option A, 19th August. Option B, 18th August. Option C, 15th August. Option D, 17th August. The correct answer is option A, 19th August. Question number 15. Encashment of bill before due date. Option A, retirement of bill. Option B, discounting of bill. Option C, honoring of bill. Option D, endorsing of bill. The correct answer is option B, discounting of bill. When bill is sold to the bank at a discounted rate, it is called discounting the bill of exchange. As cash is received on discounting the bill, it is also called encashment. Question number 16. Drawee or payee in whose favor the promissory note is drawn is also called as underscore. Option A, promisee. Option B, promissor. Option C, creditor. Option D, debtor. The correct answer is option A, promisee. The person to whom the promise to pay and sum of amount is made is called promisee. He is the person in whose favor the promissory note is drawn. Question number 17. Underscore can be a payee also. Option A, drawee. Option B, drawer. Option C, debtor. Option D, none of them. The correct answer is option B, drawer. According to Negotiable Instruments Act, 1881, a bill of exchange is defined as an instrument in writing containing an unconditional order, signed by the maker, directing a certain person to pay a certain sum of money only to, or to the order of a certain person or to the bearer of the instrument. There are three parties to a bill of exchange. Drawer is the maker of the bill of exchange. A seller/creditor who is entitled to receive money from the debtor can draw a bill of exchange upon the buyer/debtor. The drawer, after writing the bill of exchange as a maker of the bill of exchange. The drawer can be a payee also. Question number 18. Bills payable book is to keep a record of underscore. Option A, bills payable to creditors. Option B, bills received from the supplier. Option C, credit purchases. Option D, credit sales. The correct answer is option A, Bills payable to creditors. There are various subsidiary journals maintained to record various transactions. This includes sales day book, purchase day book, bills receivable book, bills payable book, etc. Bills payable book is a subsidiary book which is used to records all bills payable to creditors. Question number 19. Bill receivable book is a part of the underscore. Option A. Ledger. Option B. Balance sheet. Option C. Journal. Option D. Profit and loss account. The correct answer is option C. Journal. There are various subsidiary books or journals maintained to record various transactions like credit sale, credit purchase, bill receivables, bills payable, etc. Bills receivable book is a part of journal. Question number 20. Writing a person's name on the face or the back of the bill for transferring his right to another. Option A. Endorsement of bill. Option B. Discounting of bill. Option C. Dishonoring of bill. Option D. Renewal of bill. The correct answer is option A. Endorsement of bill. The process of transferring bill from one person to another by signing on the back of the bill in order to settle debts other than cash is called endorsement of the bill. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now. Link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.